Hello, I'm Andrew Main, Wealth Editor of The Australian, and today I'm talking to Rachel Grimes, who is Director of M&A at Westpac, and she's also, as an accountant, she's a Director of the International Federation of Accountants. It's quite an unusual phenomenon in Australia. Are there many Australians who are in that position?
No, I represent Oceania, and it's a bit like FIFA, but not as corrupt.
Oh, yeah, that's right. See me as Sepp Blatter. So you're talking to quite a lot of people in similar positions to yourself around the world about, for instance, about investment.
Look, we have 22 board members and from all over the world, and it's quite amazing how many come to myself and our Canadian director asking us how come Australia and Canada are doing so well in the world market. So, we get lots of questions like that from China, India, and US and Europe in particular.
Rachel, do you always find it strange that when you go to these gatherings, everyone's saying Australia's wonderful, then you get home and everyone's having a grumble?
Oh, look, I find it fascinating how, particularly the press and, when you've got a government and opposition as we do, how they do say how poorly Australia's doing when there's such a great sense of pride on the world stage.
About how Australia's going.
That's right.
And would you assume that there's no horrible sort of lurch coming for Australia that you can see, is there?
Well, look, I think all our economic indicators look very positive, especially when you benchmark them against much of the rest of the world.
Yeah, just ticking them off one at a time. Debt to GDP ratio, we're among the world's best.
Yes.
We've also got our own currency. That's rather fun to have. I think the Greeks and the Cypriots and various others would love to have their own currency. They could devalue if necessary. And terms of trade, I guess most particularly the underlying support from our major trading partner, China. Do you see any dramatic change in that happening anytime soon?
Well, look, I don't. I still think that they've got a lot of growth left in them, and I think Australia will benefit accordingly. I think our currency is as high as it is largely because of that, and I think it's a very positive story for Australia in the medium to long term.
But meantime, Rachel, we've had this funny situation that our own share market's gone extremely well. Well, certainly up to about the end of February. Would it be the case that perhaps after that run, there might be some logic in Australian investors in perhaps diversifying a bit more offshore?
Look, I think the diversification is always important. I think that Australia has an amazing funds management system, and I think the competition in that system is incredible. I think we have 165 Australian equity managers. So, we have an enormous amount of our investments in Australian companies, and we have a very concentrated ASX, really, when you look at the big companies that we have. So, I would always encourage some form of diversification. I think that's important. I think, that's one of the steps that BT Investment Management took, and by buying J.O. Hambro in 2011, and that is an UK European funds manager, and that allows access to their customers to invest in those sort of products. And
the Johnson report a couple of years ago was certainly suggesting that Australia is becoming a bit of a centre of excellence for funds management, and that it should be made easier for Australian fund managers to manage funds from overseas on their own account. Is that something you've had a bit of a look at?
Well, look, we are the 12th biggest economy in the world, and we are the 4th biggest funds management system, with our superannuation, which is quite incredible, and we are definitely looking at all aspects of the value chain to work through the different processes so that we can best benefit our customers.
So would you say that certainly in recent days we've had people saying Australians funds managers charge too much and those sort of criticisms? Would you say that's a valid criticism? I don't believe so myself.
I don't believe so. If you look at the basis points that we're charged on most of our funds, it's incredibly low. In fact, we found that a lot of our overseas competitors have exited Australia because they do find it so competitive to be able to sell their product. So, the margins are incredibly tight for many of our fund managers, as you would expect when there's 165 Aussie equities.
So
players.
really, it's not just that the Australian share market's a crowded trade, but the Australian funds management industry is something of a crowded trade within Australia.
It can be. I mean, there's obviously definite pockets of greatness, and you know, people aspire to invest into those, and I think it's important that, you know, they charge accordingly. But we do have such a competitive market.
So with that, would you assume there'd be a tendency for other fund managers to follow where BT's gone and actually buy funds management assets overseas?
Look, I think so. I think there's been many examples of that as people are trying to accumulate boutique type funds, and especially trying to find managers in Asia that can best represent and service clients on a consistent basis to what they do here in Australia. It's not an easy process, but you know, that is gaining more and more traction.
So you would anticipate that there's just basically a tendency to internationalise the Australian funds management industry that has barely begun at this point.
I think that's exactly right. You know, we're in a global economy, we're seeing different aspects, what we buy as consumers, etc. People want to access those sort of funds. I think there's been a greater growth on the exchange traded funds as well, to allow people to access different products that they may not otherwise, be it just a gold ETF or a silver ETF, just to diversify from pure equities as well.
But also, I think if you're an Australian retail investor, it's one thing to buy equities direct in Australia. I take it investing overseas directly into equities can be not an impossible process, but a bit fraught, and that I take it that ETFs are probably the most sensible way for them to go if they want to do that.
Oh, look, I think that's a very efficient way. I don't know if you've ever tried to invest in some overseas equities, or Australian companies have been taken over and you've been left with share script. I mean, the amount of paperwork that you have to fill out just makes it so onerous that I think the most efficient and best way is often through the funds management sector.
Yeah. Sorry, yes, funds management, and I'd forgot. Yes, there you are, a funds manager. Because yes, so I mean, just to make it clear for people watching this, an institutional funds manager will look carefully at a market, be it the US market or indeed globally, and try and pick out the best companies. And charge accordingly, so they will charge a fee that's higher than an ETF issuer. An ETF issuer, meantime, is a simpler version of the same thing, that they will offer, as you were saying, they can offer gold and other types of non-equity ETFs and fixed interest ETFs as well. But most particularly, that's the simplest way to get invested overseas. You won't be probably getting quite the same performance, because most of the time you're hugging an index, aren't you?
Indices, yes.
So it's you get what you pays for, really, isn't it?
That's exactly right.
So it's either a broad spread of investments, fairly cheap. In fact, I think the ETFs charge less than 100 basis points, less than 15 apparently in some cases for simple ETFs, or go with a funds manager, pay a fee, and hopefully get out performance.
That's it.
And don't put all your chips on one number.
That's exactly right. And back to that diversification, be it Aussie equities, a combination of international, and just the different sectors that you can invest in as well.
Rachel, thank you very much.
Thank you, Andrew.